Right, so we see the market showing weakness today as the major indices have failed to break through their resistance levels and continue the uptrend. So what we are seeing right here today is a correction that could take us back to our next support levels, not only in the SPY and the QQQ, but also in many of the stocks we have on our radar. So let's see what's going on over here. My name is Nathan. Welcome to the Finance Hydra channel, where we analyze the market every single day, paying attention to the major turning points, to the major inflection points, and always basing our ideas and insights on technical evidence. So let's get started. Welcome to another video. So what we see today is another bearish reaction in the SPY. There is not a single bullish reaction suggesting a possible recovery, suggesting a possible bottom signal. We do not see any single bottom signal right here, right now. We are still below the all-time high, below the resistance level around $600. And in theory, in the absence of a crystal clear bullish reaction, we are supposed to retest our next support area. This double support level at 586 and the 21-day EMA, the exponential moving average. This double support level is going to be the most important one on the daily chart, because only by losing this key point we're gonna technically reverse the bullish sentiment, mid-term speaking, on the daily chart. All right, as far as I know, any pullback to this support level is going to be just another possible buying opportunity. But if we lose this support level, then we're gonna technically reverse. Therefore, 586 is going to be our next major inflection point on the SPY. Let's see if we're gonna get there. Now, the QQQ is also dropping, it is correcting, it is losing yesterday's low, it is making another bearish candlestick pattern. In theory, we are supposed to retest our next support area, which, as I told you guys yesterday, is around this entire area over here near the $500, because it is the $503 support level, a previous top level on July this year. It is around the 21-day EMA, and it is also very close to the 498, the previous multiple resistance level here, 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 and here again. All right, therefore this entire area is going to be critical for the QQQ. A bullish reaction around this multiple support level would be fantastic, possibly another buying opportunity. However, if the QQQ manages to lose all of these support levels, then all right, we are gonna technically reverse. It is not gonna be easy, but it is a possibility. Therefore, let's pay extra attention on this area in the next few days, if, of course, if the QQQ gets there. Now, Nvidia is also showing some weakness over here. This one was reacting very nicely this morning, but it is losing momentum again. If you ask me, this is a classic sideways correction, better observed on the 1-hour chart, right? In this scenario, we see the 21-hour EMA totally useless. All right, moving averages, guys, moving averages are trend tracking indicators. All right, when it is trendless, when it is a sideways movement, any moving average becomes useless. All right, so right now we are dancing around this indicator, not showing any meaningful bullish reaction, but we don't see any crystal clear bearish reaction suggesting a breakout of the 144 support line, a previous top level, now support level for Nvidia. Only by losing the 144 we may see a sharper correction ahead, possibly to retest the 21-day EMA on the daily chart. Of course, 21-day EMA on the daily chart. On the weekly chart, when we take a look at the weekly chart, we see the possibility of a top signal. It is not a very scary movement, all right, but it is a possible top signal. And if we actually see a top signal on the weekly chart, we are gonna certainly lose momentum on the daily chart as well, correcting to lower support levels. So this price action is quite interesting. So far, we are inside a trading range, all right? So only a breakout would bring something new on Nvidia. Now, regarding Tesla, this one is dropping sharply today, of course, because it is Tesla. Guys, Tesla is a high beta stock, meaning this one moves with more intensity than the broad market, than the indices, than SPY, than QQQ, because it is a volatile stock. Simply put, it is a volatile stock. Right now, on the weekly chart, we are dropping only 2%, but when we measure the entire amplitude of this candlestick, we are talking about a 13% drop from the previous top level. So it is a quite intense movement. Last week we went up 29%, only 29%. So it is totally normal, acceptable to see such reaction, such pullback, because pullbacks are healthy movements, all right? They are just part of the game. As long as we see a pullback in a bull trend, well, probably it is just another buying opportunity. Pullbacks in a bull trend only represent the exhaustion, a momentary exhaustion of the previous uptrend, and an increase of the risk-reward ratio. Therefore, a pullback to the $300 or maybe even to the 21-day EMA in Tesla could be just another buying opportunity, a phenomenal movement if we see a bottom signal triggered around our support level. Of course, I agree that a pullback to the moving average would represent a roughly 10% drop, so it is gonna be quite intense, all right? So we have more downside left. I don't know if we're gonna get there or if we're gonna lose this key point. All that I know is that the risk-reward ratio is improving right now. If you wanna buy some Tesla, if you are out of Tesla, you wanna buy Tesla for the first time or buy more shares, well, a pullback would be very, very good for you. So let's see if Tesla is going to behave correctly here or not. Right now, the $314 seems to be a quite interesting support level for us. Let's see how it is going to react next. And guys, a quick message for you. Applications for the Finance Hydra Mentorship program are now open. I will analyze your portfolio, your investments, and your trades, and I will help you develop strategies that you can apply to boost your market performance. We will have weekly meetings, and you will have access to my personal number so we can communicate whatever you need. It will be 6 intense weeks that could change your life. It is gonna be the most exclusive service we have ever offered, and of course, places are limited. Therefore, for more information, just take a look at my website. Link is in the video's description. All right, now back to our analysis. When we take a look at the weekly chart, what is Tesla's next technical resistance level, technical target? $384. All right, it is a secondary target. It is not as emblematic as the all-time high, this green line over here, but it is our next technical resistance level. If you ask me, we're gonna get there. As long as we don't see a crystal clear reversal, we're gonna get there. Yes, we may see a mid-term pullback, but remember, pullbacks are not reversals. Possibly, we could see just another buying opportunity if we see the right reaction around our support level. So let's see how Tesla will behave this week. And of course, AMD finally reached our major inflection point. This purple trend line over here connecting the previous support levels since October 2022. All right, we finally got there. Now, Nathan, we got there. Is AMD a good buy right now? Guys, there is not a single bottom signal on AMD yet. We only see another bearish reaction over here today. It is not a convincing signal, at least not to me. Now you may say, but Nathan, this candlestick pattern, these two patterns, right? Today's and yesterday's pattern, they together form a classic homing pigeon candlestick pattern, which is a bullish reversal pattern, right? Well, maybe, but honestly, as long as we don't see a crystal clear bullish candlestick pattern breaking all of our previous short-term resistance levels like the 21-hour EMA, we are not gonna see a decent reaction, a decent bottom signal. So for now, let's watch AMD very closely and wait for another opportunity, all right? Right now, we are just stabilizing around a crystal clear support level. Let's see how it is going to behave in the next few days. Meanwhile, we see Palantir dropping roughly 2%. You may ask, Nathan, is this a top signal? Well, by closing below yesterday's low, yes, Palantir is triggering a top signal. Yesterday's candle could be a spinning top candlestick pattern, maybe, all right. It is a top signal. On the 1-hour chart, we see Palantir on the verge of losing the 21-hour EMA. So we are showing a lot of weakness. In this scenario, we could possibly trigger a pullback to the 21-day EMA again, which is our next technical support level. If you want to use more possible support levels on Palantir, you can use Fibonacci. The 38.2% Fibonacci's retracement is around $55. The 50% is around $52. Meanwhile, the 61.8% in the worst case scenario, if Palantir corrects very sharply, $49.60. This key point is going to be our next technical support level if a sharper correction actually occurs over here. On the weekly chart, we see some stabilization, all right? After last week's jump, we are talking about a 40% rise, so it is totally expected, not surprising at all if we see a correction in the next few days. And yesterday, we saw a possible top signal. Today, we are trying to confirm this top signal, so let's pay extra attention and wait for Palantir to reach its next support levels before saying Palantir is a buy again. All right, right now, is Palantir a buy? Of course not. We are far away from support levels. The risk-reward ratio is not good at all. I mean, okay, you want to buy. Tell me where your stop loss is going to be, all right? Because you always, please always know where your stop loss and always know where your target is going to be before you place the trade, before you enter the trade, all right? Please do not trade blindly in this scenario. Odds are that you're gonna lose money, my friend. So tell me where your stop loss is going to be. Below today's low? It is not that reliable, especially because we are on the verge of losing the moving average, and of course, we are far away from the support levels on the daily chart. After going up 40% last week, so it is gonna be a very weak technical stop loss for you to place below this key point. So guys, let's be very careful, right? Of course, now I'm talking about my humble opinion. In my humble opinion, Palantir should correct to our next support levels before we can call it a buy again, all right? Because from a technical point of view, the risk-reward ratio will be better near support levels. Now, NIO, speaking of approaching support levels, NIO apparently is trying to retest our next support area near the $3.68, 61 cents down here. There is not a single bullish reaction suggesting that we could avoid this scenario. In fact, NIO, just triggered this head and shoulders chart pattern, all right? So in theory, it is supposed to retest our next support area down here around below the $4. We don't see any bullish reaction, and to make matters worse, even if we see NIO jumping over here, retesting the $5 or maybe even the 21-day EMA again, any pullback to this resistance level could be just another dead cat bounce. Remember, according to Thomas Bukowski's studies, a pullback after the breakout of the neckline of a head and shoulders occurs roughly 65% of the time, if I recall correctly. Therefore, if we see a bounce, odds are that it's going to be a dead cat bounce. All right, we're gonna report earnings in 6 days next week. So the volatility will certainly increase in this scenario. Therefore, we should be very careful over here, all right? It is very bearish. I do not see a light in the end of this tunnel. Now, ARM Holdings is trying to stabilize around a support level. But this reaction is not enough for us to see a crystal clear bottom signal, all right? Yes, we see a possible support level around 138. There is still time for ARM Holdings to react, but if we are about to see a bullish reaction, would be very good to see the QQQ, for instance, reacting as well, because ARM Holdings will react while the broad market is bearish, while we see a quite pessimistic sentiment right now, midterm speaking, of course, on the indices, because the indices will dictate what's going to happen next. The bullish bias is very, very weak right now. We are supposed to retest next support level. So if you ask me, ARM Holdings deserves a better correction. But hey, if we see a miraculous bullish reaction tomorrow or in the next few days above the 138, fantastic. Could be another buy signal again. But I wouldn't count too much on that. And if you are still watching me and you are not a subscriber, bro, subscribe to this channel, because we are here every single day talking about SPY, QQQ, Tesla, AMD, Palantir, etc., describing all of the most important inflection points, basing our ideas and insights on technical evidence. There is no such thing as guesswork here, right? There is no gut feelings here. We only observe to the technical evidence. No euphoria, no panic, all right? We just work calmly, patiently, always waiting for the best opportunities together. And remember, if you want to participate our mentorship program, link is in this video's description. It is going to be phenomenal, my friends. I hope to see you guys over there. Thank you for your audience. Stay safe. See you guys tomorrow.